Hello, this is Huskins, your Forex mentor. This is your daily review of February 20th and the preview of February 21st, 2013. Your daily dose of the events that shaped the Forex markets. The thought of the day. If you're depressed, you're living in the past. If you're anxious, you're living in the future. If you are at peace, you're living in the present. Let's pledge as forex traders to live in the present. It's not only pleasant to live in the present, it's good for your emotion and physical well-being and also for your trading account. If you're not living in the present, I would not open my forex account and attempt to trade. Chances are you'd end up losing money. So if you're at peace and at calm, only then go about trading. Now, joke for the day. A Guju and God. Well, basically, this is the joke. Gujus are a community from India who are very business-minded, and they're. I belong to the Gujarati community, so I'm making just fun of myself. But this is the joke. The joke is that there is a blind Guju who has an old and weak a mother who's not married. I mean, the Guju is not married, and but he religiously prays every day to God. Now, God, after some time, answers his prayers and says, "Hey Guju, I will give you one wish and only one wish." And let's see what the Guju answers back. Guju says that. Thank you, God. My one and only one wish is that I wish to see my mother put a $10 million diamond necklace around my daughter, who is with my wife, sitting in a Mercedes-Benz S-Class outside my 5-acre Beverly Hills bungalow. This way, by his one wish, all his wishes are answered, and since God has promised him one wish, he gets everything he ever wanted. Now, the reason why I brought up this joke today is that I want to make this particular service which you've subscribed to similar. I want to provide you with resources which are which normal people pay a very high premium on, but I want to provide you with resources to get them close to free or absolutely free, and that's what my intention is. Today's one free resource I'm going to be talking about is the currency strength meter. Now, please visit the resources section for a link to download the currency strength meter. It's absolutely free of cost, and I'll just show you the live currency strength meter. Now, the currency strength meter tells you basically which are the markets which are open. Currently, we have the Sydney market and the Tokyo market open. The New York is closed and the London is closed. And it also gives you the news, the next major news event which we trade will be in 13 hours, 2 minutes and 33 seconds. Now, it also tells you the expected, and it will also tell you when you have the actual numbers come out. It's a nice tool. It's absolutely free, of course. You can download it. Eventually, I will start discussing ways in which I use the free resources. Right now, I just want you to be aware of what these resources are. Our second resource, which I'm going to talk to you about, is the currency correlation meter. Basically, the currencies do not exist in vacuum. Currencies are correlated with each other, and if you want to know what's the level of the actual correlation, you can look at this particular correlation meter. Again, you can go to the resources section of the website, and I've pasted the link. Well, basically, looking at the hourly correlation, you know that the USD CHF is inversely correlated to the Euro USD. You look at this, that Euro USD goes up, USD CHF goes down, and it has a 95.4% correlation. That is pretty high. Of course, it has a 100% correlation with itself, but now you cannot just base this on the hourly correlation. You need to look at the correlation, the daily correlation. Now, the daily correlation of the USD CHF versus Euro USD is pretty low. You see, the hourly is high, but the daily is low. So now basically now you know that there is something cooking in the euro CHF currency pair. This is how you find out, because if you do not have a correlation meter, you're just guessing that these two currencies might be correlated, and you do not know what's actually happening. Here, at one glance, I am able to identify where the currencies are moving. Now let's look at news. Once again, China is buying dips in gold. Basically, gold made a decisive break below 1600 overnight. Now it's was down to 1582 on its last check, and it's basically on its way to 1550. Now, I'd mentioned yesterday about gold and the reasons why the physical demand of gold is low. I'd mentioned about Iran. I'd mentioned about India. I'd now look at the other side. Why is who are the buyers at these particular prices? And my research shows that traders took last week off for the Chinese New Year. But when the Shanghai Gold Exchange reopened on Monday, volume for the benchmark cash contract set a record 22 metric tons. Now this was by Bloomberg's calculation. Now the slump in gold prices in the past week provided a great incentive for buying, said the Bank of China trader. As many Chinese are still holding a bullish outlook to gold. So my basic trade idea on gold is not to do anything right now. I'm not going to short my way to 1550. I've always been a gold buyer. If at all I believe gold's going to dip, I do not sell gold. I buy it at the place where I think it might turn back from. Now I think that it might start hitting 1550 or might even go lower and might start to turn around. I'm not going to be basing my entry based only on this particular level. I will be looking at the commodities the commitments of traders report, and when I get a signal from the commitments of traders, I will share my signal with you all on what I believe is the turning point for gold. So right now, gold is a non-buy because I do not ever sell gold. Now, some interesting news from Europe. We need to applaud the European Central Bank and the Eurozone leaders basically for making it perfectly clear that they will not participate in active exchange rate policies that most other countries are turning to. You know what's called the basic currency war. Japanese yen is perhaps the Bank of Japan loves to have its yen weaker and tries to intervene every time. So this basic news caused the euro to get a boost when the German chancellor basically said that the euro between 1.3 to 1.4 is normal. Now that's a good indication that Germany does not see a problem with a stronger euro. It's nice to know where where we stand geopolitically in terms of currency prices, so that we know whether to trade in that direction in case we get a signal or not. Another news from Obama. Obama warns of harm to the economy if the sequester takes place. Now this is Obama's Facebook post. Now I've liked Obama on President Barack Obama on my Facebook, and from time to time he keeps on updating it with he or whoever is responsible for his Facebook page keeps on updating what he believes to be the correct way to take the US economy. So basically right now his main mantra is that if Congress does not act, automatic spending cuts will, and it will cut support programs for nearly 1.2 million disadvantaged students and threaten more than 30,000 teacher and school staff jobs. Basically what he's trying to do is he's trying to garner support so that people write to the congressmen or women and ask them to not allow the sequester to take place. Now basically what is the sequester? The sequester are automatic cuts which take place on both the military and on social program. If you know that USA already has a big deficit now. Uh, the president is not in charge of bookkeeping. The controls of the purse of the USA government is by the Congress. So the Congress needs to pass and balance the budget. And there are two parties, which are the Republicans and there are the Democrats. Now the Democrats basically are more inclined towards more social programs, while as the Republicans are more inclined towards the free market and also towards a stronger military presence. So what basically happened was that they need to find some cuts somewhere. So that the deficit from USA comes down, and the way they intended to do that was to have automatic cuts take place in case Congress cannot make a decision. Now these automatic cuts were supposed to take place earlier this year, but they were delayed twice, and unlikely they'd be delayed much further. So if Congress does not act soon and pass a budget which is which takes into account spending cuts and increasing taxes, then perhaps we'd have a sequester. Now, what will happen if we do have that? That's where you and me are interested. The stock market will plummet. The US dollar will rise to the roof. Do you remember the 2008 crisis? We'd have something similar. So that's what's going to happen, and we just need to be aware of these particular terms. And the moment we know what's if the sequester is actually taking place, then we know to go long on the US dollar and go short on the on the stock exchanges. Or if you don't want to trade the stocks, you could also maybe go long on the US dollar and go short on a higher yielding currencies such as the Aussie or even the New Zealand dollar. Now a few notes and observations. Now the Euro business increasingly turned to capital markets for funding. Now responding to the downturn in lending by the banks, European businesses are going to the capital markets. That means they are issuing shares to fill the void. Now debt issued by non-financial firms rose 14% in December. So they are either borrowing through bonds or issuing shares, but they're not taking much money from the bank because the banks are tightening the way they provide money. Another important news for us forex traders is that high frequency trading is quickly expanding beyond equity markets into bonds, derivatives and currencies, now prompting opportunities as well as concerns, according to this analysis of the Financial Times. Now basically what does this mean? It means that there are certain software which are which are developed by some big hedge funds, which go in and out, like how we traders scalp the markets in out in out in out. That's exactly what's going to happen at a much higher level by these hedge funds. So sometimes we might get a sudden knee-jerk movement. We need to be aware of how the markets are changing. So do not be alarmed by a sudden knee-jerk movement in a currency. Be aware that might be happening because of the high frequency trading. Now another important news is the Japan's January trade deficit is the biggest on record. Now the foreign investment basically continues to fall in China despite signs of economic recovery. Now Moody's says that China avoided a hard landing, sees 2013 GDP at between 7.5 to 8.5 range. Now the Japanese PM says that less need for government and the private sector to jointly set up a fund to invest into foreign bonds. Another important news which we'll be looking more into detail when we look at our trade execution is that the Bank of England minutes were more dovish than expected. Vote on the quantitative easing was 6 to 3. We were expecting 9 to 0. It was in fact 6 to 3. Governor King in the minority for only the fourth time in 10 years as Bank of England governor. Now, Spain said that Spain is to impose caps on autonomous regions' bond yields to a premium of 100 basis points. Now, if you do not understand what bond yields are, not a problem. We will, over the course of this program, talk about bond yields and how it is tied into the currencies. Now, a very important observation is that the European session built up on some positive risk appetite from Asia, which initially weighed on the US dollar. So Euro USD went up, but then Euro USD saw the bulk of its Far East gains evaporate as the New York morning approached. Reports that France might face excess deficit status from the EU coupled with closer controls was the headwind which caused the Euro USD to go down. A very important point which we'll be again looking at in detail is that the trade weighted GBP at the lowest level since October 2011. The GBP remained under pressure on weak fundamentals and persistent rumors of a pending sovereign downgrade. So basically, how the USA got downgraded from a AAA rating to a AA rating. This is perhaps on the cards with the United Kingdom too. The Bank of England minutes provided another catalyst for the losses after the votes to increase the QE was 6-3. The prior was 8-1 over the last 3 months, which highlighted an unexpected decision in the ranks. Now, the Japanese yen was trading on supportive footing as reports suggested that the Japan Prime Minister and the Financial Minister set to disagree over the candidates for the next Bank of Japan governor. Now, this weak Japanese yen trend did hit some more headwinds after the Prime Minister noted that the need for government private fund to buy foreign bonds was declining. Now, let's look at our only trade, which was United Kingdom's claimant count, also known as the unemployment change. Now, I'd actually like to talk to you about the trade plan. The trade plan was a 5-minute 21 SMA reversal on the GBP USD. What actually happened? Let's see. The UK Jan jobless claims change was minus 12.5 versus minus 5.5k expected. That means it is what? It is good for the GBP. So GBP should, based on this particular news event, rise. Now the unemployment change was 4.7 versus 4.8 expected. So this again should cause the GBP to rise. Now let's see what actually happened. Did it actually rise or did something else happen? As you can see on this particular chart that instead of rising, it fell. So now it fell and our trade plan was to go ahead and buy it, right? But our trade wasn't to enter in immediately. It was to enter in after some time. So what happened? Let us see. I updated this particular news and the reason why the UK or the pound went down was because the Bank of England voted 6:3 to maintain asset purchase target unchanged at 375 billion. Now, King, Fisher, and Miles vote for 400 billion in quantitative easing policy. What does this mean? It means that there are more people in the Bank of England who want to see more money being printed from United Kingdom. If more money is printed, what should happen to the pound? Demand and supply. More money is printed, the pound will go down, and that's exactly what we saw out here. Let me pull up the chart one more time so that it's absolutely clear. So that's what caused the market to go down. So now, is our particular trade plan valid? It's no longer valid, because I was expecting a movement because of the unemployment numbers. Now, what has actually caused this movement? The Bank of England's rate split. I did not expect a rate split to be there, because it hasn't been the case for a very long time. So I did not talk about that. But when I see such a sudden movement, when I'm actually expecting it to go up because of better news from the employment region in United Kingdom, then the trade plan basically goes null and void. Even if you had entered in blind, if you weren't aware of that and you traded in vacuum, which you shouldn't have, you would have entered in out here, and you would set a 30 pip loss. We did not go to a 30 pip stop loss. It went back, and the market was at break even for some time. So basically what has happened is that there has been a fundamental shift in the perception of where the pound is headed, and that is what I do not like to trade against. So this particular trade would be should be counted as a non-trader, a no trader. Now let's look at a preview for tomorrow. Basically, tomorrow is a eventful day, but there's nothing in this which I can trade. I normally trade the unemployment claims, which is a weekly report, and that continues to be very successful, but I do not trade it if there is a conflict with some other release. So I'm not going to be trading the 8:30 news. Now I'm also not going to be trading the 10 o'clock news, because again we have the Philly Fed manufacturing index and the existing home sales. So if they conflict, I do not want to trade. So tomorrow is going to be just an observation day and not a trading day. So I am so thankful that you've joined me through the complete presentation. I hope I've added some wonderful insights to your forex trading. You can email me anytime for support. Thank you so much and have a great day. Bye for now.